Hello, today is Saturday, the 14th of August, 2010, and this is the Silver ETF, SLV. And it's going back from the 5th of May. SLV mirrors the price of silver and is about 2% plus lower than what the actual COMEX price happens to be. But overall, its movements do very well in mirroring the price of silver. And we recently had the break of this downtrend line, and it's now been used as a level of support. There's a lot more to it, as when it had its run higher, it was able to obviously not only break the trend line, it was able to get over all of the key moving averages and get above the key 18 level. The only problem was when it came back down to support, it was unable to make a higher high. This was a lower high, and then coming back down the second time, ultimately broke through that area. Therefore, we can make a case for what would be a symmetrical triangle, because when we started that move higher and it made a lower high, that's what gave it a downtrend line. Whenever you're making lower highs, you're going to have a downtrend line. Whenever you make higher lows, you'll make an uptrend line. So therefore, this low is a higher low from this low. And therefore, it's a symmetrical triangle. It's going to have to break to one side or the other by early or mid of next week. And the biggest level here is roughly at around 1790 and change, 1795. That's location to where these moving averages are cluttered together. And most of those moving averages are running averages from particular points. Like, for example, this top, that's this yellow line, this averages in here. From this bottom, same thing. And really, if you take any one of these tops and bottoms, then the majority of them are all going to be in this area, roughly around 1790. That's the average price that the SLV has traded at since many different key dates, which is why that level is very, very important. And as far as the moving averages are concerned, this one here that starts here, the reddish looking one, this is the 50-day moving average. And the 50, which was resistance with everything else a little while back, it managed to get above it, but it hasn't held this area yet. So one thing to be a little cautious about is this move here a false move? When you're in a range, then a lot of these false moves are very, very common. So let's also put that into consideration also. As far as some other key moving averages, this green one is the 5-day moving average. And the 5-day moving average is having a hard time finding a sense to where the direction of it is going towards. And right now it's at an area where it is at resistance, but the last so many times it has managed to get to a declining 5-day moving average, it's done fairly well. For the first test of the 5-day moving average that was declining here, got above it. The second test was right here, and it managed to get above it. The next test, it also managed to get above it. Again here, and then again here, and now again here. So every time a declining 50-day moving average has came into play, it has generally managed to get above it. As far as when it comes to a rising 50 or 5-day moving average, the rising 5-day moving average here, it didn't do so well. The rising 5-day moving average here, it didn't hold. The rising 5-day moving average here did not hold. The rising 5-day moving average here did hold for a while, which was able to sustain a nice little rally. But overall, we're in this major range, and this is only a decent percentage of it, because even if we break this major level roughly at around 1720, that's still there's still many areas in which it goes even lower than this, mainly even towards 16 and change. This is only a decent portion of the range. Now, as far as the symmetrical triangle, I was mentioning that we have this one in here. Overall, when you're in the range, we can draw a trend line that connects these key resistance points, and we can draw a trend line that connects these key support levels. So within the symmetrical triangle, what should happen is a breakout to the downside on this triangle should bring us a move to the support level, and a breakdown or a breakout of the resistance level should give us a test towards the uptrend line, where you most likely would find resistance or support. Of course, resistance at this level, support at this level, but just because you're supposed to doesn't mean you will. The only reason why Fibonacci, moving averages, trend lines, or any of that sort of stuff works so well is because other people are seeing it, but not only that, it also increases your probability odds, so that when you are looking for support, you are looking for resistance, it makes it easier, so that you might have a 70% chance, 75% chance, because any type of trading in the paper market, some people call it a paper Ponzi scheme, and well, I'd be one of them also. However, when you are making trades within this, it's game theory. It's a game, and you're trying to do the best you possibly can to put the odds in your favor. So whether it's within silver, whether it's within the SPY or potash, or any chart that you use, that's the significance towards the key averages in Fibonacci. So thank you for watching this video, and have yourself a magnificent weekend. Bye-bye.